Hello everyone, I'm Desiree Yvette Kabulay and I'll be the reporter for the remaining 3 objectives of this chapter. So now that we have learned about the nature and objectives of budgeting as well as its basic elements, it's now time to talk about the third topic, which is the master budget. So in this topic, we will describe the master budget for a manufacturing company. So what is a master budget? The master budget is an integrated set of operating and financial budgets for a period of time, and most companies prepare the master budget on a yearly basis. So as defined, the master budget is composed of the operating and the financial budgets. So what are these two sets of budgets? So this is a master budget for a manufacturing company. So it is composed of the operating budgets and the financial budgets. So as shown in this exhibit, the master budget begins with the preparation of the operating budgets, and these operating budgets will form the budgeted income statement, while the financial budgets provide information for the budgeted balance sheet. So as what we can see, the operating budgets is composed of the sales budget, the cost of goods sold budget. And under the cost of goods sold budget, there is production budget, direct materials purchases budget, direct labor cost budget, and also factory overhead cost budget. Also included in the operating budgets is the selling and administrative expense budget. And these operating budgets will then form the budgeted income statement. And under the financial budgets, there are cash budget and also capital expenditures budget. And in our next lessons, we will talk more about these operating budgets and financial budgets. Topic 4 is about operating budgets, and at the end of this topic, we'll be able to prepare the basic operating budgets for a manufacturing company. So what are these operating budgets? So the operating budgets are sales budget, production budget, direct materials purchases budget, direct labor cost budget, factory overhead cost budget, the cost of goods sold budget, the selling and admin expenses budget. And collectively, this will form the budgeted income statement. So this exhibit shows the relationships among the operating budgets. So just like in a normal income statement, so the budgeted income statement starts with the preparation of the sales budget. Then there are also expenses in the form of cost of goods sold budget and also the selling and admin expenses budget. And under the cost of goods sold budget, there are also production budget, direct materials purchases budget, direct labor cost budget, a factory overhead cost budget. And so sales less cost of goods sold less selling and admin expenses budget will form the budgeted income statement. So let's talk more about these operating budgets. So the first operating budget is the sales budget. So what is a sales budget? The sales budget is the forecast of the expected units a company intends to sell over a period of time and the revenue it should generate from it. So it begins by estimating the quantity of sales, and the prior year's sales are often used as the starting point. So once sales quantities are estimated, the budgeted sales can be computed as follows. So budgeted revenue is equal to expected sales volume multiplied by the expected unit sales price. So to illustrate, assume that Elite Accessories Incorporated manufactures wallets and handbags that are sold in 2 regions, the East and West regions. Elite Accessories estimates the following sales volumes and prices for 2016. So for the wallets, the estimated sales volume in the East region is 287,000, while for the West region, it is 241,000. For the handbags, the estimated sales volume in the East region is 156,400, while for the West region, it is 123,600. For the wallets, the unit selling price is $12 and the handbag is $25. So to compute for the sales budget, let's use the formula. Budgeted revenue is equal to expected sales volume times expected unit sales price. So to compute for the sales budget of Elite Accessories, this is what it looks like. So this is Elite Accessories Incorporated's sales budget for the year ending December 31, 2016. So as stated in the situation, there are two products, the wallet and the handbag. And the company sells in two regions, the East and the West region. So to get the budgeted revenue, we need to get the expected sales volume. So for the wallet, it has an estimated sales volume of 287,000 in the East region and 241,000 in the West region. So a total of 528,000 sales volume. Multiply that with the expected unit sales price of 12. So the total sales for the wallet is 6,336,000. For the handbag, the expected sales volume in the East region is 156,400 and 123,600 in the West region. So a total of 280,000 unit sales volume. Multiply that with a unit sales price of 25, so that would be a total of 7 million. So the total of the wallet and the handbags revenue from sales would be 13,336,000. So that is how we would compute the sales budget. So now that we are done with the sales budget, let's now move to the production budget. So what is a production budget? So it estimates the number of units to be manufactured to meet budgeted sales and desired inventory levels. So we have already known the expected unit sales volume. So it is now time to manufacture or to estimate the production of those unit sales volume. And we also will adjust this production budget with the desired inventory levels. So how is this computed? So the budgeted units to be produced are determined as follows. Expected units to be sold plus desired units in ending inventory less estimated units in beginning inventory is equal to the total units to be produced. So to illustrate, Elite Accessories Incorporated expects the following inventories of wallets and handbags. So for the wallet, the estimated beginning inventory is 88,000 and the expected or desired ending inventory is 80,000. For the handbag, it has an estimated beginning inventory of 48,000 and a desired ending inventory of 60,000. So to compute for the production budget, we will use the formula expected units to be sold plus desired units in ending inventory less estimated units in beginning inventory. That would be the total units to be produced. So how is this computed? So this is how we would compute the production budget of Elite Accessories Incorporated for the year ending December 31, 2016. So to start the production budget, we need the expected units to be sold. So just as what we have computed earlier, so the expected units to be sold for the wallet is 528,000, while for the handbag it is 280,000. So plus desired units in ending inventory, so that would be on December 31, 2016, so 80,000. This is 80,000 for the wallet and 60,000 for the handbag. So the total for the wallet would be 608,000 and for the handbag it is 340,000. So less estimated beginning inventory on January 1, 2016. So that is 88,000 for the wallet and 48,000 for the handbag. So the total units to be produced for the wallet is 520,000, while for the handbag it will be 292,000 units. So that is how we would compute the production budget. So now we are done with the computation of the production budget. And so after that would be the computation of the direct materials purchases budget. So the production budget is needed for the computation of direct materials purchases budget. So Previously, we have prepared a production budget, and in a manufacturing company, direct materials, direct labor, as well as factory overhead are needed to produce such goods. So direct materials must be purchased to meet the production needs. And so, the direct materials purchases budget estimates the quantities of direct materials to be purchased to support budgeted production and desired inventory levels. To compute for the direct materials purchases budget, there are 3 steps to follow. The first step is to determine the budgeted direct material required for production, and the formula to compute that would be budgeted production volume multiplied by the direct material quantity expected per unit. And so to illustrate, Elite Accessories Incorporated uses leather and lining in producing wallets and handbags. The quantity of direct materials expected to be used for each unit of product is as follows. For the wallet, the leather needed is 0.30 square yard per unit, and for the lining, it is 0.10 square yard per unit. For the handbag, the leather needed is 1.25 square yard per unit, and the lining needed is 0.50 square yard per unit. So as what we can see, there are 2 direct materials for Elite Accessories Incorporated. So these are the leather and also the lining. So these 2 materials are needed to produce their 2 products, the wallet and the handbag. So to compute for the budgeted direct material required for production, we should use the formula budgeted production volume times direct material quantity expected per unit. So this is how it is computed. So for the wallet, the leather needed is 520,000 times 0.30 square yard is equal to 156,000 square yards. So the budgeted production volume is taken from the previously computed production volume of 520,000 units. So for the leather, 520,000 units times 0.10 square yard per unit. So that would be equal to 52,000 square yards. So this means that 52,000 square yards of lining is needed to produce 520,000 units of wallet. So we will also use this formula in the computation of the handbags budgeted direct material required for production. So for the leather, 292,000 units. So this is also taken from the production budget multiplied by 1.25 square yard. So that would be equal to 365 square yards of leather. So 365,000 is needed to be able to produce the 292,000 units of handbag. For the lining, 292,000 times 0.50 square yard, so that would be equal to 146,000 square yards. So this means that 146,000 square yards of lining will be needed to produce 292,000 units of handbag. So that is how we would compute the budgeted direct material required for production. So now we are done determining the budgeted direct material required for production. So the second step would be to adjust the budgeted direct material required for production for the beginning and ending inventories to determine the direct materials to be purchased for each material. So the formula to do that would be materials required for production plus desired ending materials inventory less estimated beginning materials inventory. So that would be the direct material quantity to be purchased. So that is the second step. And then the last step would be to determine or to compute for the budgeted direct materials to be purchased. So it is computed as follows. Budgeted direct material to be purchased is equal to direct material quantity to be purchased in step 2 multiplied by the unit price. So to illustrate, the following inventory and unit price information for Elite Accessories Incorporated is expected. So since there are 2 direct materials, the estimated direct materials inventory beginning for the leather is 18,000 square yards, while for the lining, it is 15,000 square yards. The desired direct materials inventory on December 31, 2016 is 20,000 square yards for the leather and 12,000 square yards for the lining. So the estimated price per square yard of leather and lining during 2016 follows. For the leather, it is estimated at $4.50, while for the lining, it is at $1.20. So this is how the direct materials purchases budget look like. So this is for Elite Accessories Incorporated for the year ending December 31, 2016. So to compute, we need to follow these 3 steps. So the first one is the computation of the budgeted direct material required for production. So that would be budgeted production volume times direct material quantity expected per unit. So just as what we have computed earlier, for the leather, for the wallet, it would be 520,000 units times 0.30 square yard per unit. So that would be 156,000 square yards of leather is needed to produce 520,000 units of wallet. And for the lining, 52,000 square yards is needed to produce the 520,000 units of wallet. So the same goes with the handbag. So 365,000 square yards of leather is needed to produce 292,000 units of handbag, while 146,000 square yards of lining is needed to produce the 292,000 units of handbag. And the second would be to adjust the materials required for production for the desired ending inventory and less estimated beginning inventory. So plus 20,000 units for the leather and plus 12,000 units for the lining. So the total would be 541,000 for the leather and 210,000 for the lining, less estimated inventory beginning of 18,000 for the leather and 15,000 for the lining. So the total square yards to be purchased for the leather is 523,000, while it is 195,000 square yards for the lining. So multiply that with the unit price, so we would get the budgeted direct material to be purchased. So $4.50 for the leather, while it is $1.20 for the lining. So the total direct materials to be purchased for the leather is 2,352,500, while for the lining it is 234,000. So a total of 2,587,500. So that is how we would compute for the direct materials purchases budget. So after computing for the direct materials purchases budget, so we would also compute for the direct labor cost budget. So this is the second cost that will flow through the cost of goods sold budget. So in addition to direct materials, manufacturing companies also need employees to convert materials into finished products. So the cost of employee wages, that is an integral part of the finished product, is classified as direct labor cost. And the direct labor cost budget estimates the direct labor hours and related costs needed to support budgeted production. So how is this computed? So there are 2 steps to follow. So the first one is to determine the budgeted direct labor hours required for production. So how is this computed? So it is computed by multiplying budgeted production volume times the direct labor hours expected per unit. So to illustrate, Elite Accessories Incorporated's production managers estimate the following direct labor hours are needed to produce a wallet and handbag. So for the wallet, 0.10 hour per unit is needed in the cutting department and 0.25 hour per unit is needed in the sewing department. For the handbag, 0.15 hour per unit is needed in the cutting department and 0.40 hour per unit is needed in the sewing department. So to compute for the budgeted direct labor hours required for production, the formula is budgeted production volume times direct labor hours expected. per unit. So to illustrate, so this is for the wallet. So in the cutting department, 520,000 units times 0.10 hour per unit is equal to 52,000 direct labor hours. So we have computed this earlier in the production budget that 520,000 units will be produced for the year ending December 31, 2016. So the 52,000 direct labor hours is needed in the cutting department to manufacture or produce 520,000 units of wallet. So for the sewing department, 520,000 units times 0.25 hour per unit is equal to 130,000 direct labor hours. So this means that 130,000 direct labor hours in the sewing department is needed to manufacture 520,000 units of wallet. So the same goes for the computation of the handbag. So in the cutting department, the budgeted production volume is 292,000, just as what we have computed earlier, multiplied by 0.15 hour per unit. So that would be equal to 43,800 direct labor hours. In the sewing department, 292,000 units times 0.40 hour per unit is equal to 116,800 direct labor hours. So this means that to manufacture 292,000 units of handbag, 116,800 direct labor hours is needed in the sewing department. So that is how we would compute for the budgeted direct labor hours required for production. So after the computation of the budgeted direct labor hours required for production, the second step would be to determine the total direct labor cost. So to compute, the formula is direct labor required for production as what we have computed in step 1 multiplied by the hourly rate. So this is how the direct labor cost budget for Elite Accessories Incorporated looks like. So to compute, we need to follow these two steps. So first is the computation of the budgeted direct labor hours required for production. The formula is budgeted production volume times direct labor hours expected per unit. So as what we have computed earlier, for the wallet, the direct labor hours needed in the cutting department is 52,000, while it is 130,000 direct labor hours in the sewing department. For the handbag, 43,800 direct labor hours is needed in the cutting department to manufacture 292,000 units. And in the sewing department, 116,800 is needed to manufacture 292,000 units of handbag. So the total in the cutting department is 95,800 direct labor hours, while in the sewing department it is 246,800. So the second step in the computation of the direct labor cost budget would be direct labor cost is equal to direct labor hours, direct labor required for production multiplied by the hourly rate. So the hourly rate for the cutting department is $12, while in the sewing department it is $15. So multiply these two. So the total direct labor cost would be 1,149,600 in the cutting department, and in the sewing department it is 3,702,000. So the total direct labor cost budget for the year ending December 31, 2016 is 4,851,600. And that is how we would compute for the direct labor cost budget. So now that we are done with the direct labor cost budget, we will now move on to the factory overhead cost budget. And this is actually the third product cost that will flow to the production of the company. So factory overhead includes all manufacturing costs except direct materials and direct labor. So example of these costs are indirect materials, indirect labor, factory power, and factory depreciation. And the factory overhead costs budget estimates the cost for each item of factory overhead needed to support budgeted production. So this is an illustration of factory overhead costs for Elite Accessories Incorporated for the year ending December 31, 2016. So as mentioned earlier, examples of factory overhead costs are indirect material, indirect labor, factory power, and factory depreciation. And in this example, there is an indirect factory wages amounting to $732,800. So indirect factory wages fall under indirect labor. And this factory overhead cost budget may be supported by departmental schedules. And in those departmental schedules, so these costs are normally separated into fixed and variable costs so that the managers will be able to determine or will be able to monitor and evaluate such costs during the year. And for the year ending December 31, 2016, Elite Accessories expects or estimates a total factory overhead cost of $2,089,080. So now that we are done with the factory overhead cost budget, we will now move on to the cost of goods sold budget. So to compute for the cost of goods sold, so the following budgets are integrated. First is the direct materials purchases budget, then the direct labor cost budget, the factory overhead cost budget. And in addition, estimated and desired inventories for direct materials, work in process, and finished goods must be integrated into the cost of goods sold budget. So to illustrate, Elite Accessories Incorporated expects the following direct materials, work in process, and finished goods inventories. So for the direct materials, the estimated beginning inventory for leather is $81,000, while it is $18,000 for the lining. And the desired inventory on December 31, 2016 is $90,000 for the leather and $14,400 for the lining. So the total estimated inventory beginning is $99,000, while it is $104,400 for the desired inventory on December 31, 2016. The work in process beginning is estimated at $240,400, and the desired ending work in process is at $220,000. The finished goods inventory beginning is estimated at $1,095,600, and the finished goods inventory end is desired at $1,565,000. So this is how we would compute for the cost of goods sold budget. For this is for Elite Accessories Incorporated for the year ending December 31, 2016. So it starts with the presentation of the finished goods inventory. So that is on January 1, 2016 at $1,095,600. Then we would also provide for the work in process inventory beginning, and that is $240,400. Next is the computation of the direct materials and also the direct labor and the factory overhead costs. So for the direct materials, the formula to compute for the cost of direct materials placed in production, it is direct materials inventory beginning of $99,000 plus direct materials purchases of $2,587,500. So we have computed this earlier in the direct materials purchases budget. So the total of these two would be cost of direct materials available for use, amounting to $2,686,500, less direct materials inventory ending of $104,400 as stated in the situation. So the cost of direct materials placed in production is $2,582,100. Then we would also need to compute for the direct labor cost for the year ending December 31, 2016, which is $4,851,600. So this was computed earlier through the direct materials cost budget. And the third manufacturing cost is the factory overhead amounting to $2,089,080. So just as what was provided earlier in the factory overhead cost budget. So the total of these three manufacturing costs is 9,522,780. And then add the work in process beginning. So that would equal to the total work in process during period of 9,737,180 less the work in process ending of 220,000. So that is how we would compute for the cost of goods manufactured, which totals 9,517,180. So cost of goods manufactured plus the finished goods inventory beginning. So that would equal to the cost of finished goods available for sale, which is 10,612,780 less the finished goods inventory end of 1,565,000. So that is the cost of goods sold of 9,047,780. So the computation for the cost of goods sold is just like in a normal cost of goods sold statement. It is just that the amounts are actually budgeted instead of the actual costs. So for the year ending December 31, 2016, Elite Accessories estimates or expects a cost of goods sold of 9,447,780. So that is the computation of the cost of goods sold. So after the computation of the cost of goods sold would be the computation of selling and admin expenses budget. So how is the selling and administrative expenses budget computed? So the sales budget is often used as the starting point for the selling and administrative expenses budget. For example, a budgeted increase in sales may require more advertising expenses. So to illustrate, so this is the selling and administrative expenses budget of Elite Accessories Incorporated for the year ending December 31, 2016. So as what we can see, the selling expenses total 1,190,000 while the administrative expenses total 695,000. So normally the selling and administrative expenses budget are supported by departmental schedules. So for example, the advertising expense budget is under the marketing department. So the marketing department could include the advertising media to be used, whether it is newspaper, direct mail, or television. And in addition, it also needs to quantify those. So whether it be column inches, number of pieces, or minutes of the advertisement, and the related cost per unit of those advertising expenses. So as what we can see, the total selling and administrative expenses for Elite Accessories is $1,885,000 for the year ending December 31, 2016. So for this budget year, the company expects to shell out or to pay for this amount of selling and administrative expenses. So now we are done with the selling and admin expenses budget. So these operating budgets will then be used in the computation of the budgeted income statement. So the budgeted income statement is prepared by integrating the following budgets. First is the sales budget, then the cost of goods sold budget, and also the selling and administrative expenses budget. And in addition to these three budgets, the estimates of other income, other expenses, and income tax are also integrated into the budgeted income statement. So this is how the budgeted income statement looks like. So this is for Elite Accessories Incorporated for the year ending December 31, 2016. So just like in a normal income statement, it begins with the revenue from sales of 13,336,000. So this is what we have computed earlier in the sales budget. So the total revenue from sales is 13,336,000, followed by the cost of goods sold as what we have computed earlier of 9,047,780. So revenue from sales less cost of goods sold is equal to gross profit amounting to 4,288,220. Next is the selling and administrative expenses budget. So, just like what we have presented earlier, the selling expenses is equal to 1,190,000 and the administrative expenses is equal to 695,000. So the total selling and admin expenses is 1,885,000. So gross profit less the selling and admin expenses would be equal to the income from operations of 2,403,220. Then we would adjust this income from operations for the other income and other expenses. So there is an interest revenue of 98,000 and an interest expense of 90,000. So a net income from other income of 8,000. Then add that to the income from operations, that would equal to the income before income tax of 2,411,220. So assuming that the income tax is 600,000, the net income is 1,811,220. So that is how we would compute for the budgeted income statement. So for the year ending December 31, 2016, Elite Accessories Incorporated expects to earn or to have a net income of 1,811,220. So that concludes the topic about operating budget.